probably the easiest annuity to talk about. Because again, you're not selling the annuity. People don't sell these annuities, clients buy annuities.
All right, hello everybody. We've got Scottie Rapp on with us. This is part two of his training. First part was his IUL breakdown series on how he does such a phenomenal job working with clients, taking them from the call to Zoom, and produces IULs. Go find that training on YouTube. But today we're going to talk about his FIA and annuity production, how he transitions maybe from an IUL sale to an annuity, or how he seeks out annuities, gives clients comfort and confidence that annuity is a great option for them to put their money into. How are we doing today, Scotty?
Good. How are you? Thanks for having me.
I'm amazing. Happy you're on.
Yes, sir.
All right, so give us the we just got done talking about IULs, but you said
Mm.
part of that is that when you're doing a financial inventory with the clients, you run into money. What do you have that acts like life insurance? The golden question. And you
Yep.
run into some money and see where it is and decide whether or not it's something good to present an annuity sale to. How does that all work for you?
So basically, we just wrapped up the IUL training and basically went through that process. So if you want to learn, because a lot of FIA money is going to come from an IUL or a regular life insurance lead, but the first training would be good to watch so you know how to transition into this one. But long story short, you're basically looking for people that are pre-retirement, right, or in retirement that have money directly in the market, which means they have fluctuating and speculative accounts where they could go up or down or lose on their nest egg, right? A lot of people don't even understand what type of products that are actually available in today's marketplace. Because if you were in retirement, right, or pre-retirement, and you actually took a legitimate look into Athene's Performance Elite 10 Plus annuity, right? And you understood the fundamentals of it, it'd be a no-brainer. You just buy it, right? But the problem is there's people that are just not educated that they're out there because 20 years ago the annuity market was a lot different. There was low caps, low participation rates. Most people are only familiar with fixed annuities, which means you only get 2% a year for 5 years. You lock your money up, or a variable annuity that their guy at, their financial advisor set them up with that goes up and down, which we don't do that because we only protect people's money, which is good. And also shout out to Brad Allen because he's the one that taught me a lot of this stuff. Um, so basically, having that conversation once you finish the life appointment, and if you're on Zoom already doing an IUL with the client, it's a perfect opportunity, right, to bring up an illustration with Athene, which basically is just a simple saving method where the client can just protect what they have and get interest and protect themselves when the market goes down. And, for the sake of simplicity, the Performance Elite 10, I think that one's probably the easiest annuity to talk about. Because again, you're not selling the annuity. People don't sell these annuities, clients buy annuities. It has to be a good fit. They have to be suitable. They have to be in the position where it makes sense for them to allocate a portion of, their retirement or nest egg into a safe money management plan, like I like to call it. And basically, it just comes down to the same thing as an IUL. You're just showing an illustration, right? Which I can run through an illustration if you'd like me to.
Love it.
Okay. So let me go ahead and share my screen just to make it super simple for everybody, right? And you got to be suitable with Athene, right? Which Athene obviously get contracted and then obviously talk to your admin, and then also do the the three product trainings for Athene on Regit, and then all your state suitability trainings. But for example, they have really three products, right? They have the Performance Elite 10, right? Which there's two versions of the Performance Elite 10. There's the base product and then there's the plus. Today I'll be talking about the plus. This is a growth annuity. It means you move the money over It's not for income purposes, although within that 10-year contract, right, you can pull 10% every year and 20% if you miss a year with the Performance Elite 10 Plus. Okay. So, and mind you, to move money into an annuity, it has to either be pre tax money or it has to be post tax money. Pre tax, like hasn't paid taxes on it, that's called qualified funds. That would be like a 401k or an IRA. Okay. Non qualified funds, which is not also known as non traditional money, that's like a Roth account, which they've already been paying taxes along the way, which you can move that type of money, but if there's 2 separate tax qualifications, you'd have to put one in one annuity, one in the other. So you had to do 2 applications with a theme, just so you guys know. Okay, so say we're moving over 100,000, right? Old 401k from the employer, and mind you, if you bump into money and they're under 59 and can do a direct rollover or transfer of funds out of their current employer, a 1035 exchange, if it's not tied to their employer. If they can, great. If they can't, which they most likely won't be able to, you won't be able to move the funds. But if they're over 59 and a half, you usually can, especially if they just got a new job and this account is from an old employer. It's a no brainer, right? The money's just sitting in whatever institution. Nobody's managing it besides their robots. And that's what I'll tell them. Like, hey, is anyone, you said you just got a new job, but your 401k was with your old employer, right? So what are you doing with that? And they'll tell you, well, it's just sitting there. I don't know what to do with it. Oh, perfect. Well, let me show you this simple retirement plan that we use here, which we move a lot of old 401ks into. Makes a lot of sense if once I educate you on the plan and just getting into the Zoom and the illustration. So let me show you the Performance Elite 10 Plus. And I love this stuff.
Awesome.
So the Performance Elite 10 Plus, basically what you got to understand, page 2, very simple application. Has guarantees, right? You can't go below 0. You have growth potential. Check your states, but most states have a premium bonus of 18% with the Performance Elite 10 Plus. Okay, and then some states like California, Texas, they're 16% with the plus. Protection. So you're protected on the downside, no risk in your money, which means if you move 100,000, you can't ever log in your account and see it go below 100,000. So you explain that. You're tax deferred on the rollover. There's no taxes when you roll the money over. It's just a 1035 exchange from one institution to the next. And then these are people that are just looking to protect, grow what they have, and take a lifetime income that they can't outlive and just protect their nest egg. That's really what this type of plan is going to do for you. And you got to have a beneficiary, you will have a death benefit. Now, let's talk
One of the
about
factors,
index.
though, too, Scotty, always just important to hit on is there's no health qualifications. So anyone, no matter of the health, where an IUL is going to have some health restrictions based on the amount of death benefits attached, there's no health restrictions to an annuity because it's all based on how much money they put into the product.
Right, and you broke up for me on my side while you said that, but I'm pretty sure you said, like, if you can't get them approved for life insurance, this is a good route. That's basically what you're saying, right?
Basically, yeah.
Yeah, so and you might bump into that with, like, a GIW. I ran into a GIWL client once, this guy had $200,000 in his 401k or IRA, right? Couldn't get him approved for a $20,000 GIWL for, $180 a month, didn't make sense to him. I showed him this plan and we're working on him right now. So obviously, when you're getting an 18% bonus, it could be looked at like a final expense supplement. Because hey, if you move 100,000 and you get 18%, that's $18,000, directly into your account when you move it over. So that's that death benefit there. Let's go to index allocation. So basically, there's a bunch of different indexes you can allocate the funds to. This is when you move the money in. You could pick which one you want it to go to, right? Brad always taught me for whatever reason that he always used the BNB Paribas, which I like. That's the one I still use because I followed the greats. And clearly when you do the application with Athene, you could always reallocate the strategy every year, or you could just pick the growth option when you do the application and they'll do it for you. So This one, 117% participation rate. So remember, whatever the index does, that's what they're timesing it by. 80, and I'll run through this with a client. Like this is my sales process with a client. This is literally it. So I'd be like, hey Jim, 87% of the time over a 10-year period, or the best 10 years, 87% of the time it's going to kick off some sort of interest in your account. And then I'll show the annual return with the participation rates and the 10-year or best year look back there. And then that's the 1 year, right? So I'll split it up between that one, and then I'll split it up between that same index on the 2 year, which is this one. This one's allocated over a 2-year mark. So the first year they'll get a interest credit for the 1 year. We have 50% of their funds in, the one I just showed you. And then this one will allocate on year two. They'll get a credit for this one on year two. So that's all that's going on. There's no cap. There's big participation rates over a 2-year mark here. Last 10 years, 99% of the time, it's going to kick off interest to the client's account, right? And there's the average annual return they're illustrating at 12.04 based off, the index and how it's operating. So that's that. And then the next thing it's very simple to explain. This is the guaranteed, right? So this is if the market does absolutely zero for the next 100 years, right?
Okay.
Or what? Uh,
I said, "Oh, cool."
yeah, so cool, right? Like, hey, Mary, if the market doesn't perform at all, you're never gonna lose, right? So you can see, guys, that even when the market doesn't do well, they never go below zero there. And I did this off a 57-year-old, right? Because I figured, like, hey, they're right before that retirement age bracket or whatever. This is one I did earlier for you guys. And then, so you touch on that real quick, and then you go to pretty sure Athene illustrates off the best 10 years or the last 10 years. I think they change it on and off. But let's just say whatever the last 10 years of data, right? So the state I did, I think I might have did California. You move 100,000, and I'll tell them this. Hey, this is for 100,000. You're gonna get that premium bonus of 16,000. That's 16%, and it's just a growth account, right? So you're 57 now. It's the 10-year contract. You're in it until 67. This is how it could potentially perform if it performs anything close to what it did in the last 10 years. Each year, you can pull out 10%, right? Starting on year one with the plus, okay? And then 20% if you miss a year. And then once you're out of the 10-year contract, you're just out, right? And then this column, the income, is the required minimum distributions that they have to take starting at age 75, the minimum that they would have to withdraw, but they could, potentially just leave the money in there. Now the difference between the a Performance Elite 10 Plus and the Performance Elite 10 Base. So the Plus product, right, is going to have that bigger bonus of 16 or 18% depending on the state. Okay, it's going to have also more liquidity in the contract. So those are the three things to pay attention to. What's the participation rate? What's the cap? What's the liquidity in the contract? And then what's the surrender schedule like? Which those are the most important things I would say. So the first year, right, with the plus, now she can pull 10% out penalty free withdrawal. Now I'll do you a quick example there. So you can pull 10% out here. If you miss a year, right, you could pull 20%. Now, if you go over the 10%, for example, if you have 100,000 in the account and you pull out 10,000, right? You're in your penalty free withdrawal. But for a worst case scenario, you had to take out 11,000, which is 1,000 over, they would hold 10% back, so $100. They would hold back. So they wouldn't charge you the withdrawal charge off of the whole thing, just the 1,000 that you went over, just so you guys know. And when you tell that to a client, which I got that from Brad, he's taught me that. But when you tell that to a client, they're like, "Oh, well, that's not even that bad. It's only what I went over. So worst case scenario, So 20% if you miss a year. So this one has more liquidity, and on year four, right, it has a return of premium option, which means Athene pretty much guarantees that the surrender value will be never be less than what you actually put into the annuity. So worst case scenario, it doesn't perform how you want. Year four, you can surrender the contract. So more liquidity in the plus, right? um, and the return of premium option. Now the plus has a 0.95 fee and the higher bonus, by the way. But the plus has a 0.95 fee every single year, okay? Off the accumulated value if you want the bigger bonus, okay? Now, the Performance Elite 10 base product is the same exact product, same illustration here. It's just going to come with a little smaller of a bonus, right? So typically, the bonus with the Performance Elite 10 base is like 12% or 10%, depending on the state. The only liquidity in the contract, right? So it would look the same from an indexing standpoint and everything like that. The only difference is starting on year two, you can pull only 5% starting on year two until the contract's over after 10 years. So, but there's no fee on the accumulated value. So the Performance Elite Plus base has no fee, no risk, no cap. That's technically the case for this one too. But if you want that bigger bonus with the plus there and you feel like your client needs more liquidity, which I'll let them pick and choose which one's more suitable. Like, hey, do you need liquidity or you want to be pulling money from this account? If so, let's go with the plus. If they're like 51 or 50, for example, and they can't even touch the funds anyway until 59 and a half, I'd be like, hey, let's just put you in the base because you can't pull this money anyway to your 59 and a half. So why pay a fee if you're not going to pull it anyway? So, and even if you do have to, you can pull 5% with the base product. And that's pretty much it with the Athene illustration. And then, you do the application through Firelight. It goes over to the SRS team, Simple Retirement Team. They'll scan it before it even gets to Athene. You'll might most likely have to make some corrections there. And then they work that out with you. And then you submit it over to Athene. And then you just got to do the back end transfer paperwork, which on the application you put down where the money's coming from, and then you put down the fax number. Make sure you always put down the fax number. Once Athene gets the contract, they will fax the paperwork over to wherever the money is. I just had one issued this morning. The funding company literally got it, sent the check without even me having to do anything. A lot of times, though, you'll have to call in with the client, liquidate the funds, have them pull up the transfer paperwork from Athene, have them do the liquidation and the 1035 exchange and expedite the check to Athene. Once Athene gets the check, they fund the contract. Um, and then there's the delivery form, right? Which you can send it through DocuSign or Athene has an email they can sign, and it's good to go, right? And these people are typically pretty happy because, hey, we do an annual check in now, and 12%, you got your bonus of 16,000. I'm working on some pretty big ones right now. I think I cut out for a little there, huh?
Just for a second. It's all good.
Yeah, I'm working on some pretty big ones right now. Just the more education you have, and it has to be a suitable option for the client. And most of the time, right, if they're 55 to 72, like for example, I got a guy I'm working on right now with one of my teammates. He's got $250,000 in a CD. And I'm like, people with CDs, they love this stuff, but they would love it more if they actually even knew about it. Like once you show this, it's like, dude, no brainer.
Yeah.
I'm gonna wrap my money up in the bank.
Will you scroll down just half a slide so we can show how the RMDs apply to the cumulative withdrawals? So you're 70, they put in 100 grand when they're 57, they get a $16,000 bonus. So that's 16,000. Now, if we look at the accumulated value column, that's the 8.79% of applied to that. So they got 125 grand basically at the end of their first year. Now you fast forward 18 years. Now, granted, this is people's savings, right? And so Scotty built a program that's going to start paying them when they're older. Now he could start the payments I think after year 10 or 11, right? But just looking at down there at beginning year age 75, they take 24,940 out and they start to take more RMDs out. But then look at year 82. They've taken out cumulatively $261,000 and they originally only put in 100, and that's after 7 years. Scroll to like 85, Scotty. So by like 85, they've taken out 400 grand they've taken out over 10 years, and they put in 100. Now it grew compound interest. We got it, but they never lost a penny. They had a death benefit the entire time. Look at that death benefit. They hit the bucket at 85. Family gets 914 grand, $914,000, and I mean, like, right? It's am I missing anything, Scotty? Like, is what this part of the presentation always just got me so excited because I saw how much you could continually take out, and it still grew, and how much you could take out after 10 years, and the death benefit's still there. Like, holy cow, right?
Yeah. No brainer. I love this stuff because it's just there's no way to lose. So it's like relaying that to a client and just showing them. It's like, they love fall in love with this stuff. And then you show credibility on Athene. Go to their website, pull up the latest news article, go to athene.com/financials. You see they got 269 billion in assets under management. They're backed by Goldman Sachs. They're A rated all across the board with the 4 8 rating entities that you'll see there. They're 100% liquid. They're forced to buy reinsurance, right? They're the reinsurer of some pretty big institutions. I believe still Voya, they're the reinsurer of them, and they're backed by Goldman Sachs. So when I send an email to a client after I reviewed this with them, I'm listing website, non-biased YouTube reviews. Like I'm giving them the brochure, all of that illustration, and I know for a fact like they can't go anywhere and try to get someone to rip this apart. Like you can't rip these apart, right? Unless you just can't rip them apart.
That's right, bro. Well,
So
Scotty, thank you so much for the time, guys. Please drop another SR Slam Fest into the chat below to show Scottie Rapp some love for all that he shared with us today. Tremendous value so far. Can't wait to see the production you continue to put up. Any final thoughts you maybe got to give to some new agents out there that are might still be a little bit intimidated, but have more confidence than they did an hour ago?
hope so.
Any final words you got for us?
Thanks for having me on the call, guys. Just go out there and crush it. I came in with no experience 18 months ago and I just decided to get obsessed, obsession and work ethic and just desire to win that, and everyone can get their hands on that, right? Anyone can go out there and crush this business. You just have to make a decision every single day that you have to go all in so you can put yourself in that place you want to be. So happy end of the year to you guys. Hoping everyone has a good New Year's. Merry Christmas to everyone. You and Chantel as well, Grady.
Thanks, brother.
And it's a pleasure to be on the call. Thank you very much for having me.
Thank you, bro. All right, everybody. Make it a great day. Go get educated, make some dials, go crush it this week, and this talk to you soon. Bye for now.